I'm selling everything.
Oh my God! Okay, it's happening. Everybody stay calm.
What's the
Everybody
procedure,
stay calm.
everyone? What's the procedure?
Stay calm.
Well, maybe not everything, but a lot of things. We'll get to that in just a second. But today marks my 26th birthday, which also means that we have 4 years left to reach our net worth and passive income goals. For those of you new to the series, every single month on the 1st, I document my progress or lack thereof as I attempt to reach a $1 million net worth and a $30,000 per year passive income. And it's been a little over 3 years since we started this series, and if you want to stay tuned for the next few years, then be sure to subscribe and tap that bell icon while you're at it. But with that said, we need to talk about what happened in the last few weeks, because a lot has changed for me financially, or at least things are really being set in motion that were not in motion before. And I think it'd be easier to explain if we actually just went straight into the numbers, so let's go ahead and do that. As a reminder, last month our net worth was right around $113,000. Currently have no cash, and that's because I liquidated pretty much my whole portfolio and rolled all of that into Silicon Valley Bank call options, and those are set to expire next week.
And it's gone.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
Ha! April Fools.
We do a little trolling. It's called we do a little trolling.
April Fools aside, let's take a look at my actual balance sheet. We now have over $100,000 in cash, and you might be wondering where that came from. Well, if we move on down the balance sheet, we can see that my stock portfolio has largely been liquidated down to nothing. At least if you don't count the carpet and steam cleaning business that I bought back in January, since that is 100% owned by me, but it's not a publicly traded stock like all the other holdings I used to have. And if we take a look at my overall stock portfolio, not including my retirement accounts, you can see an even clearer picture. By the way, you can check out all of this in the description below. If you go to my net worth tracker spreadsheet, you can take a look at all the data and look at things for yourself as well. But my only remaining publicly traded stock holding would be Berkshire Hathaway. That's about 2.5 shares because M1 Finance does fractional shares, and that's where I have it. And one reason I held on to those is because I need at least 1 share to attend the Berkshire Hathaway annual meeting coming up next month. Looking forward to seeing some of you in Omaha. So as you can see, my stock portfolio is highly concentrated, pretty much all into my one private holding, which is the carpet and steam cleaning business I recently bought. So yes, this is not an April Fool's joke, and I did in fact sell all of those stocks. And that's why I now have a significant amount of cash at the top of the asset sheet. But that's not the end of it, because I'm actually planning on selling my Indianapolis rental property, the one that I bought back in July of 2020, which, once it's sold, should bring my cash total up to well over $200,000. We're making some finishing touches on the property right now, which I expect to be listed in the coming weeks, if not the coming days. And we actually should be able to get quite a bit more than I might have realized initially. I was expecting maybe a list price on the upper end of about $130,000, but after we've put about $20,000 to $25,000 into it since the recent tenant moved out, there was quite a bit of repairs that we had to make anyways, but we ended up improving some things, fresh coat of paint everywhere. It does look a whole lot better than it did before. And that does include a full bathroom remodel as well. But a house nearby just sold for $170,000, so it's quite a bit higher than I might have expected, which is great. I really haven't been paying too much attention to the sales prices of these houses, but since I'm moving to consolidate my portfolio anyways, I thought I'd take a look at the real estate as well, and I'm pretty satisfied with what we could potentially get for it. And that's considering that my total investment into this property is around $110,000. That's the $85,000 purchase price, plus around $25,000 to $30,000 in total rehab over the past few years that we've owned it. And meanwhile, we were collecting rent that entire time. And later on in this video, I'll get back to why I sold my stocks and why I'm planning to sell this rental property, but for now, let's finish these numbers. So in total, that leaves me with about $1.28 million in assets. And now on to liabilities. Pretty much all I did this month was make the minimum payments on all of these loans, plus a little bit here and there, but not a whole lot of action this month. I do plan on making some more significant payments next month, but I'm just trying to get through this consolidation process and didn't want to do too much while this money was transferring around. The nice thing is, for almost all these loans, definitely all the personal loans and the mortgages, is that every single month the principal portion of my minimum payments gets larger and larger. So more of the loan is getting paid down, even though the actual payment is the same. So even if I don't make significant extra payments, the principal paydown will continue to accelerate, which is a nice built-in feature. Though I guess no interest probably would have been a better feature. And here's my debt paydown tracker. You can see all of the principal paydown that each of these loans has had in the last month, which came out to about $3,500. Again, I didn't make a bunch of extra payments this month because I'm just trying to consolidate all this cash and see where I'm really at when everything clears. But that does mean in the last 3 months, I've paid down nearly $37,000 in debt, which is a significant chunk of the $200,000 goal I have for debt paydown in 2023. But in total, that leaves me with just shy of $1.16 million in liabilities, which means our net worth is around $125,000, which is an increase of over $12,000 from last month. Our debt ratio has fallen to 90.23%, and our passive income has fallen down to $600 per month, and that's because of the sale of the Indianapolis rental property that is going to be underway soon. The property is currently vacant. Overall, a pretty eventful month on the balance sheet, if I do say so myself, and it was a positive step in any event. And that was to cap off an eventful 25 years on this earth. We'll see what the 26th year has in store. Now, back to why I'm selling. Well, there are a few reasons. For one, I've talked about on this channel before about the whole return on invested brain damage concept. That's something that Bill Ackman coined, as far as I know. The idea of it is you want the expected payoff of an investment to be worth the stress of holding that investment. And for me, especially since I invested nearly $200,000 into a business that I'm now running, it doesn't make a lot of sense to spend a bunch of time on $5,000 to $10,000 holdings like I had throughout my stock portfolio. I was pretty concentrated relative to many other people's portfolios, but it still involved a lot of active effort if I was really trying to beat the market, and it was still for a bunch of small holdings. So even if I had an outsized return, it really wasn't going to move the needle all that much in my financial life. Whereas that same effort reinvested into my business probably would start to move the needle, or at least it would have a much greater payoff in the future. Eventually, I would expect that balance to shift when I have more money to invest, and therefore I can scale my investments into things, and the extra 5% I make on something really would be moving the needle in a big way. But for now, I don't think it makes sense while I have these other opportunities in front of me. To that, I want to invest my time and energy into things that make more money, or at least they have a lot higher cash flow upside that could eventually then be reinvested into stocks and real estate and more defensive assets, as I like to call them. Recently, there have been some opportunities to acquire competitors within the carpet and steam cleaning space, so that could be a really lucrative opportunity, seeing as though I already own a carpet and steam cleaning business, and being able to buy the assets of another business could be a great way to dramatically increase cash flow and market share. And the expected payoff there would probably be a lot greater than if I invested it into a handful of stocks that I'm only partly paying attention to anyways because I'm busy with a bunch of other stuff. And just from a cheapness point of view, if you look at a lot of public stocks, a lot of them are well over 10 times their free cash flow. Sometimes they're a lot less than that, but in many cases it's because there's something going on with the company that the people don't like. But in many cases, that's because something is going on with the company, and then you have to try and figure out whether they're going to get through that thing, and that's a whole exercise in itself. But the multiples you see on a lot of public stocks, even relatively cheap ones, typically are way higher than what you can find on the private market for small businesses. The problem with small businesses is they aren't nearly as scalable as an opportunity like a publicly traded stock that has a large market cap. You can put a bunch of money into it and then you call it a day from there. Whereas when you buy a small business, you're probably going to have a lot of active management to worry about, or at least you're going to have to place someone to actually run the thing. So there's a lot more stress involved, but the payoff can be much greater, not only because it's much cheaper, but also you have full control over where the business is going. And for a business with many years behind it, that cash flow might be pretty predictable so long as you don't make radical changes to the business right off the bat. Or maybe you do want to make radical changes, that's up to you. But the point is, these businesses are a lot cheaper most of the time. Well, when it comes to my Indianapolis property, let's say I could sell the thing for 170 grand. It might be closer to 160, but either way, let's say you have $160,000 in equity. Well, you could probably make, on a really good year, $10,000 in cash flow on that investment, but that's probably pushing it quite a bit. But then you compare the same $160,000 invested into a small business at 2 times free cash flow, but then all of a sudden you're making $80,000 per year on your equity, not just the $10,000. Barring disaster, of course. But ideally, you can see where I'm going with this. I'm trying to invest my money into concentrated opportunities that can pay me a lot more than a more passive opportunity that really is more of a defensive asset anyways. It's not to say that my Indianapolis house or my stocks were overall bad investments. I certainly learned a lot in owning them, and I made some money on at least some of them. But I don't want to dilute my money and attention towards these more defensive assets that really aren't going to move the needle in a big way, and instead I'd rather focus my time and energy towards specific opportunities that I think could be really big opportunities both to grow as an investor, as a business person, and to make some serious cash flow in the meantime. Then we can get back to scooping up real estate more aggressively. So that's why I've decided to sell. I think this next next year, my 26th year of life, will be a very important one when it comes to the business side of things. There's going to be a lot to learn as a business owner, as a team leader, as someone building out a team to run a business. I think it's going to be a really great learning experience. And I think in the long term, this will be one of the most important years of my life because there's going to be so much that I'll be learning that's going to pay me in a big way if I take the right lessons from it. And I'll be documenting it all here on the channel. So be sure to subscribe if you haven't already. And as always, thanks for watching.